Nvidia is reporting earnings in a few days. As my largest position, I've been analyzing every angle, and I have noted 17 things that I will be watching during the earnings. Let me break it down in today's episode, so let's get started.
I want to thank The Motley Fool for sponsoring this video, and check out fool.com/Jose for the 10 best stocks to buy now. With that link, you get a promotional offer for the subscription service. Now, let's continue with today's episode.
Number one is the Blackwell saga. Rumors have been coming up about Nvidia's next generation Blackwell architecture being delayed, and it's time for some answers. So we're going to be looking for Nvidia to address these speculations head on. Are there any delays? If so, what's causing them? Is it a capacity crunch or a yield issue with advanced packaging? What is the move forward, and is it impacting revenue guidance? So obviously these Blackwell rumors are creating a lot of questions, and I think this needs to be answered, especially since in the last quarter, Jensen Huang did kind of confirm the Blackwell progress, where he mentioned that Blackwell is in full production and they are working to bring up their systems and cloud partners for global availability later this year. He also did emphasize the demand for the Hopper architecture, as demand for H200 and Blackwell is well ahead of supply, and they expect demand may exceed supply well into next year. So again, we've heard a lot last earnings quarter, but this earnings quarter, we need to kind of get those answers head on, if there's any delays and what's causing it and the final impact. Now, thing number two that I'm watching is overall expectations. Can Nvidia be what the street wants? So Wall Street obviously has set the bar high, and I mean really high, for Nvidia. They're expecting revenue of at least $28.7 billion this quarter, and that is 113% year-over-year growth, and earnings per share of 64 cents, representing 138% year-over-year growth. But luckily for us, Nvidia has a habit of shattering expectations, and I don't believe this is going to be any different. Now, in the last earnings call, the CFO did give us a guidance, and total revenue was expected to be $28 billion plus or minus 2%. So it is well in line with what analysts are expecting, as they see sequential growth in all market platforms. The other thing outside of the actual numbers is guidance. Guidance is also an important metric for quarter three. Wall Street is expecting guidance of $31.6 billion and earnings per share of no less than 71 cents. For the past few years, Wall Street has still underestimated guidance, and as we can see from the chart, as we get closer to earnings, guidance estimates increase. So a beat here isn't just about numbers, it's a statement that signals that right now there's still so much appetite for Nvidia's AI chips, and this isn't necessarily any form of AI hype. Now, before we go any further, don't forget to subscribe if you want to learn more about the semiconductor market. I do have very insightful ebooks for sale at moresemiinvesting.com. I have a free newsletter found in the pinned comment. Finally, a special offer at fool.com/Jose. The third thing I'm going to be watching is this overall China story. So the China situation is very complicated, right? We've seen export restrictions has hit Nvidia's data center revenue in China very, very hard. But here's where things get interesting. There's been a lot of rumors and articles coming out this past few months that the H20, a variant designed to comply with these restrictions, can score multi-billion dollars in revenue this year. So we want to hear from Nvidia about this potential H20 demand. Obviously, in the last quarter, the CFO did address issue in China. They mentioned that their data center revenue in China is down significantly from level prior to the imposition of these export restrictions. They expect the market in China to remain very competitive going forward. Now, kind of talking about this competitive landscape in China, we've seen kind of other companies like Huawei release a new chip in the Chinese market. And we also see the Chinese market go more into a self-reliance in domestic chip. So we want to hear about competitive landscape. We also want to hear more about the B20, which is expected to be the next iteration of the H20, a variant of the Blackwell, which should be compliant with these restrictions. So a huge update in the Chinese market, in my opinion, is something to keep an eye out for, or an ear out for. Number 4. data center dominance. Last quarter, Nvidia's data center revenue skyrocket. The question is, can they keep with momentum going forward? And I believe the answer is yes, but obviously we're going to have to keep a closer eye out. We've heard from cloud server providers that they continue to increase capex to keep up with AI spending. I mean, last quarter, data center revenue was $22.6 billion, was a record and up 23% sequentially and up 427% year over year. Now, as we get further into quarters, obviously those comparable sales compared to last quarter are going to be weaker, not weaker, harder to see. So I don't think we're going to see those 400% year over year growth, but we're still expected to see nice sequential and year over year growth overall. Number 5 is supply and demand, which has a delicate balance right now. Nvidia has been in a unique position where demand is outstripping supply, especially for the H100, the H200, and as we know, their upcoming Blackwell platform. So Jensen obviously addressed this last quarter where they're seeing increased demand of Hopper throughout this quarter, and they expect demand to outstrip supply for some time as they transition to the H200 and then transition to the Blackwell. So we have to see, are they ramping up productions? Have they found new manufacturing partners? And the insight of when supply might catch up with demand could be crucial for predicting future revenue streams. I mean, we've heard from TSMC that they are increasing their CoWoS capacity, the advanced packaging solution that is used to build AI chips, which we know is the major bottleneck on AI chips. Also, I would like to hear more about other supply chain issues, like any updates with HBM, or memory companies evolving and kind of innovating at a rapid pace that Nvidia needs them to. Number 6, the rise of sovereign AI. So sovereign AI is Nvidia's next big bet, and we've talked about it numerous times in this channel, and it's one that's obviously can grow dramatically, as right now they're targeting billions in revenue from a market that barely existed a year ago. So I want to hear if there's any announcements or partnerships with any forms of countries. We've heard a lot throughout the kind of past few quarters with countries like Japan, like Korea, like Indonesia, like India, and the list goes on and on. So we want to continue to hear more partnerships like that. Number 7 is margins. Nvidia's gross margins have been dominating, as I believe the most recent quarter was closer to 78%. Now, in the last quarter earnings, we did hear from the CFO that full year they expect gross margins to be in the mid 70% range. And for it to be in the mid 70% range, it's to assume that in the upcoming quarters, we're gonna probably see a decrease in gross margins, as 78% probably was the peak, and we're gonna see kind of that depreciation in gross margins. Now, the real question is that the case? If it is depreciating, how much is it? And are we still intact for that mid 70% range? Number 8 is the acceleration of the automotive market and other markets. Nvidia is not obviously just about gaming, and their data center solutions are used in various industries, but they mentioned that the automotive market is one of their biggest consumption of data center solutions. They expect automotive to be their largest enterprise vertical within data center this year, driving a multi-billion revenue opportunity across on-prem and cloud consumption. So right now, the automotive market is using a lot of kind of cloud server providers for their AI needs. So I want to hear if there's still growth here going on in the automotive market, especially since we heard a lot about the robotic space. And I also want to keep an ear out for any other markets that are becoming a huge customer in AI cloud consumption. Is it the healthcare market? Is it kind of the advertising market? Is there any other market out there that is picking up their spending on AI cloud consumption? And I think that's definitely something investors should listen out for. Number 9 is obviously competition and staying ahead of the pack. In this overall fast-paced world of AI, standing still means falling behind. Nvidia's strategy here could determine whether they'll remain the AI chip king, and I believe they are going at full throttle, so there's not much to address in forms of competition. But we recently heard from AMD announcing a yearly cadence, very similar to Nvidia. We've also heard reports that OpenAI is building its own chips with maybe Broadcom, so a little bit of a discussion in the competitive landscape and how Nvidia sees it right now versus 3 months ago. Now, number 10 to 17, I'm going to fast forward it because these are smaller markets and smaller opportunities, but I think they are very important. So the gaming segment. The gaming segment is seeing a nice growth with the growth of things like the AI market, the PC market. So gaming segment is very important. Next, we have networking products like their Spectrum X growth and their infinite band solution. So we want to hear more about their networking products. Number 12 is the AI PC market developments. We are expected to see a nice growth in laptops due to the AI PC market. Can Nvidia benefit from this? Obviously, the answer is yes, as their consumer GPUs are definitely great for on-device AI solutions. Number 13 is operating expense growth. Number 14, capital return policies. So companies building up a nice amount of cash. Are they planning on doing any more acquisitions? We just heard AMD do an acquisition. I want to see what Nvidia is thinking and how it's going to use the cash that it has on hand right now. Number 15 is inference workload trends. We've heard in the past that inference is around 40% of their AI workloads. Has this changed? Is training still a huge position? How is the market shifting? Number 16, new partnerships or ecosystem developments. So again, pretty similar to, are we seeing sovereign AI? What industries are growing in the AI space? What partnerships are they making? Are there any ecosystem developments in forms of their software solutions, in forms of their networking solutions, in forms of their clouding solutions? And number 17, long-term vision and strategy updates. Obviously, Jensen is a very visionary character, but I want to make sure that he stays with that same tone of this is a revolutionary product and we still are in early innings and we have a multi-year in this AI space. So those are the 17 things that I am keeping an eye out. Before we go anywhere, I do want to know from you, what are you watching for? Let me know in the comments below. So take care, have a good day, and see you next time.